All right, good evening, everyone. This is Professor Cornelius Ward, and as I always say, I hope that you guys have been profiting with the professor. This evening, I'm going to do another training video on the indicators that the team and I use. The team is basically Toshi Markets HNW, and we have different branches. We offer different services to different classes and groups of investors. And so this is a particular group of people who are interested in indicators. So we service high net worth clients. We also service people who are interested in trading on their own, which is what this one is about, teaching people how to trade on their own. And then we also have mentorship programs for those who actually want to become a professional at doing this without even needing an indicator. You can just read the candles on your own with your eyes. We have all of that available depending on where you are. So tonight is going to be strictly about those who are interested in placing their own entries and their own targets without waiting for somebody to send them a signal or without waiting for some indicator to pop up on your screen. You can do this at your own leisure whenever you feel like it. So that's the whole point of this, is to give you your time back. That way you're not rushed. Because I remember being on the end of receiving signals, and I'm at the grocery store and I don't have time to review it to even see if I want to get in on it. And then I get another update that everybody's making money, but I didn't jump in on it. So, you know, that frustrated me. So I understand how that can be. And so we want to help those who are interested in having their own autonomy and freedom to be able to put trades in like a professional, but at their leisure. All right, so anybody want to give me a pair to work with, or do you guys want to just do the typical major pairs or something? Is there something someone's looking at? Maybe they want to.
Aussie CAD.
Aussie CAD, all right. You and CAD, what is up with you and CAD? You just can't let the CAD go.
And no idea, guys. Anyone else in the room, feel free to put it in the chat or
Yeah.
list whatever peer. Yeah, like don't be shy.
Yeah, so if you guys want to type it, that's fine. If you want to unmute yourselves, that's fine. Again, this is not a professional forum. This is us just, the market's closed right now, so we're just talking as friends and family. All right, Kavork, we'll look at gold afterwards. So let's use P2P. Let's go over P2P real quick. As you can see, I have them here. I have it here already up here. P2P stands for pivot to pivot, and the INDi is just an abbreviation for the word indicator. That's it. And so what we have here is the ability to go ahead and map out what's called curve. Curve analysis is when you're trying to determine from one pivot all the way around, that's why it's called curve, to the bottom pivot. You're trying to determine what is the curve that current price action, which is this area over here, is working within. So anytime you hear us say curve analysis, all we're doing is we're saying wherever current price is, it has to be working within a pivot high and a pivot low. And the financial term for that is called curve analysis. And so if you guys ever say, hey, professor, or hey, team, anybody on the team, just hey, anybody, you could just throw that in the chat group. Hey, anyone, can someone give me a curve analysis for, as Kavork just said, for gold? That's all you have to say. And then we'll go ahead and go through this process and then we'll post it. But we're going to teach you how to do it yourself so that you can have it as well. So let's go to Aussie CAD. I think I have it up here. Let's go to my miners. Aussie CAD, bam. All right, so the first thing you want to do is you want to go to point and figure. And I actually should say the very, very, very first thing you want to do is make sure that you have Premium Plus subscription from TradingView, okay? The reason why I'm saying that is because there are some limitations with any other subscription. And so some of the things I'm going to show you today are limited to premium only plans. One of those things would be the time frames. How low can you go on a time frame using point and figure? It's limited on every other subscription other than premium. You can go all the way down to the seconds with point and figure. Another limitation with let's say Pro Plus, even if you get the Pro Plus, one of the limitations is the alerts. Your alerts will not be like mine here, if I were to go to mine and go to edit, you see where it says here, open-ended alert? You'll see this, but if you toggle it right here, you're going to get a pop-up if you have anything less than premium, because anything less than premium, you have to set an expiration date for your alerts. So my alerts are permanent. I don't ever want them to expire. But if you guys are, wanting to have these alerts set up, like I'm going to show you guys how to set them up, and you don't want to have to go through the process of keep updating them. I believe you have to update them every 90 days. So it's not a lot. It's 4 times a year, but it might become annoying. So my advice to everyone is, if you're really going to take this seriously and you're thinking about actually making some real money and actually trying to, maybe change your life, get off your job, start your own business, do what you've always wanted to do and free your time, get the premium plan, because there are features on there that you're going to need. There's a reason why they put all the good stuff on the premium plan, because that's what all the professionals use. And if the professionals are using the premium plan, why would you use anything less than? There's obviously something you're missing. So you don't want to spend all this money and you're still not receiving and getting all the tools that you need to make the informed decisions that you need to make when you're trading. All right, so with that being said, the first thing we're gonna do is we're gonna go to AussieCAD, and we're gonna go to point and figure here. Point and figure is part of the bar styles of charts. There's a lot of them in here. I do have some videos and some teachings on how different one of these bar graphs work, but I don't use them. Even if I were to teach it to you, I don't even use them, so it doesn't matter. What I'm about to show you tonight is bread and butter. It's solid. But what you will be using along with the indicators will be the Japanese candlesticks, and you will be using point and figure. And within the indicator, especially TEMASHA, we're going to also have the Heikin-Ashi bar charts. So looking up here, as you can see, if you hit the drop down menu, you just put a star right here or highlight it. And what it's going to do is going to add it to favorites, and then it'll be up here so that you can quickly get to it, because you're going to be clicking it quite often. So AussieCAD, going to go to point and figure. I'm going to click on that there. And I want to show you something. Typically I start with about maybe the 3-day, because I'm looking for these pivot highs. Now these pivot highs are only associated with P2P INDi. If I were to toggle this off, and you see the indicators went away. If you have TEMASHA, some of you are already subscribed to TEMASHA, but notice TEMASHA does not come with the pivots. So if you are looking to capitalize with it, most of our subscribers have both, and I'm gonna show you why. So let me erase all of this here. So let me turn back on P2P INDi, and as you can see, the pivots have popped up. It's identifying them. So I'm going to go a little higher on the time frame. This is another reason why you want to get premium, is because you want to be able to have access to any time frame you need. See how I got a lot of time frames up here? I use them all. Trust me, I do. Okay, because supply and demand can hide on any time frame. But if you're limited to the 1 month, the 1 week, the 1 day, just those typical ones that come with the plan, and you never look past that, you're missing a lot of viable and beneficial information. But you're not missing anything if you don't know how to read the candles. So I guess it goes back to what you know how to read and what you know. So if you don't know how to technically like read candlesticks, then maybe it doesn't matter, but it's gonna matter as you grow and develop, especially if you're gonna be using the indicator. The indicator needs you to have more access to more time frames, because it's going to be looking for supply and demand for you. It's gonna cut down your time. So as you can see, as I go up the time frame, I'm losing more and more pivots. Now I have no pivots. And what point and figure does is it gets rid of all of the noise. Noise that you will see on a traditional Japanese candlestick looks just like a whole bunch of basing candles, a bunch of wicks, small bases, and they're not making any real sense. They're just kind of going sideways or ranging. We call that noise. Okay, it's just a bunch of fluctuations that they're just random fluctuations. Think of it like that. They make no real logical sense. And so what point and figure does is it gets rid of that noise, because the Japanese candlestick, it's making note of everything. And so you want to make sure that you are getting rid of that noise before you jump into the Japanese candlesticks. So I can see here, there's a pivot high here. Just going to keep going down. I'm looking for curve, remember? Pivot high to pivot low. And I'm looking for the very first one. So here's current price right here. This red represents the fact that Aussie CAD has been coming down. And so since it's been coming down from somewhere. So I want to find that pivot high that it's coming down from, or I want to find out where it's going down to. So let's keep going back. And now we can see it came from this pivot high right here. All right. Now, I don't want to use this pivot high and this pivot high simply because this picture is too big. If you look over here, it's 102 all the way to 86. That's a lot of information. So I'm going to limit it to something smaller. So I'm going to go down to the 21 hour, and already I'm starting to see here, there's something coming up at this pivot low. All right. But we still have this pivot low here as well. And then we have this right here, this pivot high. So as you can see, price action reacted to something over here. I'm more concerned about this up here. This was was current price, but it had to come from somewhere, and it came from this pivot high. But this pivot high is a reaction to something here. Okay, so I'm going to go back a little more. I'm going to show you why I'm focusing on that. Here we go. So notice we had a pivot high. It came all the way down. It created this pivot low, came all the way up, created this pivot high, and now it's on its way back down again. So what we have is it's on its way back down to this pivot low, but where did this pivot low come from? It came from here. We don't want to use this in the front because that's not where this pivot low came from. This was created after the pivot low. So we want to get curve based on the previous pivot high, which this reacted to, and where is current price going down to, which is the pivot low. So I'll say it one more time so that you guys understand it. When you're using P2P INDi, the first thing you want to do is you want to find current price. Then you want to decide, where did current price come from? It came from up here. Okay? And if it came from up here, then you want to find out, in this situation, what is it reacting to? And then where did this come from? And it came from this pivot low here. Okay, this is a little tricky one because of how wide the range is and because it went up and came down, but we're going to see if this works, and I'm going to dial it into a lower time frame real soon. And you know what? I think I am going to use this because this thing fell. What is this here? Yeah, that thing fell a lot. All right, so we're going to look at current price. Where did current price come from? It came from this pivot high. So we're going to tap into this pivot high. I was doing some advanced stuff, but we're going to leave that out. So we're going to tap into this pivot high here. So then I'm going to put a line there, right in the center of that X. Make sure you have your magnet mode on so you can snap it on the exact price. You want to get the exact price. And then I'm going to snap it on this pivot low. Why? Because current price 1 came from this pivot high 2, and this pivot high came from this pivot low. That's 3. That's what you want. Some of you may know it as ABC. So this will be A. Current price came from B, and then B came from C. And so now you have your pivot high, your pivot low. You then want to go here, hit settings, and you see where it says pivot high and pivot low? You're going to type those numbers in here. But before I do that, I'm going to reset my chart down here. And now I'm going to type those numbers in that I see to the right, 99.60 and 82.80. So 0.9960, 0.8280. Now here is the magic. This is the part I love about the indicator here, about P2P. Once I type in the pivot high and the pivot low, it's going to map out the curve for me. I don't have to do anything other than find the correct pivot high and the pivot low. So I'm going to do it one more time before we do this. A, You have to find current price. Figure out where current price came from. Where is the very first pivot that it came from? It came from this pivot high. And then where did this is B, where did this pivot high come from? It came from this pivot low, that's C. That's all you got to do. A, B, C, or 1, 2, 3. That's what you have to do. Give me 1 second, guys. Can somebody check and see why, I guess, Kai's having a hard time getting in? If somebody can resend him the link for me, I appreciate it. Thank you.
You say Kai?
Yeah, Kai. He DM'd me and said he can't get in, but I don't know why. All right, so 1, 2, 3. That's all you got to know. Where's current price? Which is the last pivot it came from? This here. Yes. So the last pivot that it came from is here, and then we have this pivot right here. And so now here's the magic. I'm going to go to the settings, type in, actually I'm going to reset first. And then I'm going to type in those two numbers, 0.9960, 0.8280. I'm going to hit OK. I'm going to take my slider and I'm going to make sure that it is right before the pivot low, right before whichever pivot is the last pivot, which is this one, because I want to shade the area that I'm working with, the curve or the area that I'm working with. As you can see, it already populated every sell order, every buy order, and every TP you're going to need. Because it's in an uptrend. That's what it's saying here. I need to go over here and I need to remove in my style. So inputs is when you're going to type numbers in and then place a label on the chart. Style is when you're going to use a pre-populated label like it is over here. And if I want to style it differently, then I need to check or uncheck these pre-populated labels. So because it says uptrend, I'm going to get rid of my sell order TPs. Notice we have some TPs for both the buy and the sales. So I don't need the sell ones because I'm going to be going long. So I'm going to get rid of all three of these sales. I'm going to hit OK. And here's something you need to remember. Because we got rid of all the noise, when we go back to the Japanese candlestick, all this noise is going to come back. So how do we keep from looking at all that noise? I'm going to show you what the noise looks like. So this is the 12-hour chart. Notice because we're on point and figure, I can see the pivot high and the pivot low because all the noise is gone. I'm going to switch back to the Japanese candlestick and let's see if we can still see it. In most cases you can't, but let's see if we can. If we can see from the pivot high to the pivot low on the 12-hour chart, but on the Japanese candlesticks. And if I were to reset it, this is the most data I get. All I can see is mid pivot and TP1. Why? Because all of those candles are back. All of that noise, that unnecessary data is back. So when you're on point and figure and you only need this information here, the best way that I found to get rid of all that noise so that the Japanese candlesticks will not show the noise, just like point and figure is not showing the noise, you want to go up to the next incremental time frame. And what I mean by that is this: if you're on a minute chart, then you want to jump up to the hourly chart on the Japanese candlestick. If you're on the hourly chart using point and figure, then you want to go to the daily chart on the Japanese candlestick. And if you're on the daily chart on point and figure, then you want to go to the weekly chart on the Japanese candlestick, so on and so forth. The reason why you're doing that is because as you go up in time on Japanese candlesticks, the candles become bigger because they start merging all of those noisy candles together and you get a smoother picture. So watch how I switch from 12-hour to the 12-day on the Japanese candlestick. So I'm going to switch to Japanese candlestick, and now I'm going to switch from the 12-hour to the 12-day, and let's see what we got. And there it is. Now I can see the entire picture from top to bottom without all the noise. Not only can I see without all the noise, it's already highlighting supply for me to tell me how high the market's gonna go. It's even telling me the best place to get in for a sell order. And it's telling me that as price comes down, this is where I should be getting in for my buy orders. It's gonna be one of these two areas. Now I can keep going down the time frame to try to drill it in. One of the safest bets you guys can have when you're using this is always place the bottom one. That's the safest one. That's the most conservative, 83.64. This one here, wait for price action to drop below it and then use it as a buy stop order when it turns around and comes back up, rather than a buy limit order, because I cannot guarantee you what this means. We've programmed this to identify demand and supply. And so there's a lot of information plugged into here, a lot of information as far as the coding goes. And so we had to map out a range of where price action can turn. And so the system has calculated that this is where demand is at. And so somewhere within this range, there's going to be an institutional order that kicks in, or quite a bit of orders, and it's going to cause the market to turn and go to the upside. Give me 1 second here. Let's see. So that's one way you can handle this. But the other way you can handle it is this. I'm going to now show you, once you do this, you're now done. All you got to do is put your orders in. Put your price in here and here, put your 2 sell orders down here, put your 2 buy orders down here, and that's it. And you let the system just do its thing. The position size that I use is this. If you want to be very, 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 very conservative, I'm serious about this, and you want to trade consistently, and you want to, I'm gonna have to say it this way, you want to lose the least amount of money, and you want to consistently win, and then over time your account will become large and big. The easiest way to do it is whatever your balance is in your account, use that as your position size for your trades when you're trading Forex. So if you have $5,000 in your account, the most conservative position size you can put in is a 5,000 unit position size. Now, I know many of you are thinking, I'm not going to make a lot of money per trade. That's not what this is about. This is not about getting rich quick. I haven't met that person yet. I haven't met that person that got rich quick and maintained it. I met people to get rich quick and lost it quick. But the people who are consistently making small profit, their accounts grow and they keep growing and they never run out of money, and it compounds as it grows. It doesn't keep growing small, because watch this. If you're trading 5,000 units today and you're consistently making profit, well, the next time you go into trade, now you're going to be trading 5,100. And then you're going to be trading 5,500, and then you're going to be trading 6,000 units, and then you're going to be trading 7,000 units. And it's just going to keep compounding on top of itself. And eventually your account's just going to be up there and you're not going to be worried about anything. But the reason why I'm saying that is because if you trade with that type of a position size, you're only using between 2 to 3% of your balance. And when price action fluctuates like it will do, like look at this. Imagine if I was in this trade way up here and I got in right where it sold, and it started shorting, and I'm trying to, let's say, take profit somewhere down here, maybe this one here, and I want to get in on a buy, and I just want to hold it all the way to here. Look at what it did. Is it going to get down here to this buy order? Absolutely, because it has to go to demand. But look how it pulled back. It pulled back almost 1,000 pips before it continued the downtrend, fooling people into thinking that the trend changed. But the trend never changed to an uptrend. It was just a massive retracement, but there was no trend change. The trend is still down, no matter how massive this pullback is. Well, it's not a pullback, it's a retracement. Pullbacks are smaller. Pullbacks are these here. These are pullbacks, even though they're big. Those 200 pip pullback, but these are called pullbacks. These right here, these larger ones are retracements. You can trade these. You're not supposed to trade pullbacks. You're supposed to just hold it while it pulls back. But when it retraces, you're supposed to get out of that trade and take it up, but only if you know how to do that. If you don't know how to do that, then you just hold it and do a wealth trade, but you'll be holding it forever because this thing was February of 2021. You'd still be in this trade waiting because it did this whole backup thing. So the reason why I'm bringing that up is because if you trade with a smaller position size like that, when price action fluctuates and bounces back and forth, you can ride that out. Many times when you guys see my post, I don't post stop losses. Not because I don't believe in them. I do believe in them, but I don't use them because my position size is so small that when I go to put in 2% of a position and I put my stop loss in at 2% as well, because I do a 1-to-1 trade, my stop loss is so far away, it's irrelevant. My stop loss is typically outside of the pivot low. So if I put an order in to buy and my stop loss falls way down here, do I really need it? No, because if I see it going down, I'm not gonna wait for it to come way down here to hit. I'm gonna close it way before it gets down here. So the reality is I don't need it. I'll just close it if I see it going against me, or if I don't like how much I'm losing, I just manually close the trade. That's it. And that's how I'm trading. And my stop loss doesn't get hit. And I just ride this thing out. It can go against me 100 pips if it wants to, because my real stop loss is way down here. I'll just hold it until it turns around. Once it turns, I then add a stop loss to protect the position in case it goes back down. I don't want to be in drawdown a second time. So I'll do drawdown the first time, but I'm not doing drawdown the second time. The second time, you're going to pay me if you pull back. I want to get a check. And your positive stop loss is what we call it, needs to be double of whatever spread is. So if spread is 2, then you want your positive stop loss to be 4 pips above your entry or 4 pips below your entry if you're shorting. That's how you want to do it. You want to double it. Why? Because the first amount of spread is going to go to your broker and you need to get paid for your time. The trade might have gone in your favor, but then it returned back to your entry. You should get something for your time. So why pay the broker and you not get paid? So both of you get paid. Double whatever the spread is, and that'll be your positive stop loss. All right. So that's how you use P2P. It's that easy. And go back and watch the video and you'll be able to see how to set this up again. Any questions on P2P before I move on to TEMASHA? Any questions? No? All right. Well, if you do get a question pop up in your head as I'm talking, butt in, bother me, you'll be fine. So now let's say we're on Aussie CAD and I'm like, man, okay, this thing has still got a ways to go down. Well, then where am I going to get in? That's where TEMASHA comes in at. P2P is great at identifying curve and setting you up for supply and demand, but it does not help you with jumping in when you're already in the middle of curve. So right now we're in the middle of curve. Anything above demand and below supply is considered the middle of curve. And you'll hear professionals say, don't fiddle in the middle. In other words, stay away from it. Just wait for it to come to demand and buy, or wait for it to get all the way to the top towards resistance and sell. Stay there and you'll be safe. But how many of us want to wait for that? Nobody wants to wait. This is a long ride down. I could be making money on the way down. So how do I get in? I need TEMASHA. So I'm going to turn on TEMASHA here. And this is what you're going to see. And I don't want you to get alarmed when you look at all this. There are 3 things that you're going to focus on here. The 3 things you're focusing on, let me get rid of the, hide it for a minute. There we go. We're going to hide the candles. So when we're looking at TEMASHA, this is TEMASHA right here. These 3 pieces of information. So you have this white line, the blue line, and then you have the green and red candlestick line. This green and red candlestick line is what I pointed at earlier here, called Heikin-Ashi. Okay, these are Heikin-Ashi candles. More specifically, these are what we call smooth Heikin-Ashi candles. Why? Because they've been set with very specific parameters to be able to identify what I'm going to show you it's going to be doing. So if we go into TEMASHA here, if I go into the settings, you'll see if we go into the inputs, you'll see these 2 boxes already checked, downtrend and uptrend. That represents these labels here, downtrend signal That's what DT stands for. And then if you see UT, that stands for uptrend. And then we have uptrend signal, uptrend confirm. We have downtrend signal, and we also have downtrend confirmed. All right. When I go in here, if you don't want to see those, you would uncheck those. But I always leave them checked because you want to be alerted when the trend is changing. Now, if you go to style, you're going to see these three here. That's these three lines I told you about. There's the God line, which is white. There's the guide line, which is blue. And then there's Heikin-Ashi, which is here. All right. Now, what's happening is there's a lot of data. Okay, there's coding that went into creating these. This is our proprietary indicator. We own this. And so this is not something you can find out in the world. We took about maybe 40 something years of combined team experience and we plugged it all into this. And so I'm going to show you how powerful this is. We're going to back test it so that you guys can see exactly what I'm talking about. And we'll be done maybe in about 15, 20 minutes. All right, so the three pieces you want to understand is the God line kind of acts like, and it kind of acts like a moving average. And the reason why I'm being careful with my words is because they're not anything particular. It's a bunch of calculations, kind of like when you program an algorithm or an EA on MT4. There's a lot of data that goes in there, so you really can't give that a particular name. So that's why you hear me fumbling, trying to figure out how to word it to give you the best understanding. But think of this white line, the God line, as a moving average. It's not measuring anything specific. It's just averaging things out. It's not giving you an exact number, but it is smoothing out the trend so that you can see what the trend really is. And so as you can see, when this God line starts curving and coming down, it means that the trend is actually changing and it's coming to the downside. But when you see the blue line drop through the God line like that to the downside, this is more like an oscillator. And oscillators are a little different from moving averages. Oscillators they measure more of the momentum, and then moving averages more so measure the trend. And so if we look at the blue one and think of an oscillator as measuring momentum, you can see the momentum of this thing shot down really fast. And oscillators typically give you, if you look at oscillators, especially on TradingView, if you go here, pick any symbol, if you go all the way to the bottom, you might have to drag this up and down. But if you drag it up, you'll see where it says more technicals. If you click on that, you'll see what I'm talking about here. We have some oscillators here, and we have moving averages. And then right in the middle, you have a summary, which is basically just an average of the two together. If I were to take whatever this number is on the oscillator, average it out with the number of the moving average, I get this summary here. So for Aussie CAD, what it's saying is the oscillator is typically the early indication before the moving average. Notice what the moving average is saying. The moving average is saying it's in a strong selling position. Well, we know that because we just used P2P, and P2P told us it's selling and it still has a ways to go down to that demand level. But look at what the oscillator is doing. It's already preparing your mind for the turn. The oscillator knows we're getting close to demand. And that's what this is about. Okay, so that's how I want you to see these lines here. The blue one acts like a moving average. The blue one acts like the oscillator. It gives you the early indication. It starts moving first. It's the most sensitive. Whereas the oscillator is the most sensitive. And so that's what this blue line is. The guide line is guiding you. And so the God line, it's less interactive, but it's the confirmation of the guideline. Until this guideline does what the guideline does, the trend is not going to change. Trend doesn't change just because of the guideline, because of this blue one. Trend changes because of the guideline. This is stronger. This is your second confirmation. So think of the blue one as your first confirmation and the white one as your second confirmation. And it's even a stronger confirmation than the blue one because it's averaging it out. This is saying right now, and this is saying on average. So once the average matches the right now, you have a complete confirmation of a trend change. On top of that, I want you to notice that we have a red smooth Heikin-Ashi. So not only did this thing cross down, and then the guideline followed suit and started averaging itself down. Now you got a confirmation here, but you also have red smooth Heikin-Ashi. Not only do you have red Heikin-Ashi, but you even have a downtrend signal and a downtrend confirmed inside of there. So you have all this information helping you out. All right. So I'm going to turn back on the candles. And what I'm going to do is I'm going to turn back on P2P INDi. And we're going to turn it on with TEMASHA. And the reason why I'm turning on both is because I want this pivot high. So what I'm going to do is I see price action is here. And if I'm trying to jump in this trade, I need to jump in this trade based on what it's doing right now. And so I need to figure out what's happening with this little wick here. That's about 53 pips worth of movement. And so if I want to see this on a smaller time frame, all I got to do is use the time frame that I used to start everything. It was the 12-hour on point and figure. It's the 12-day with the Japanese candlesticks. And now that I want to use TEMASHA to fine-tune my entry, guess what time frame I'm going to use? The 12-minute, because I want to really zoom in on this 53 pip pullback. So I'm going to go down to the 12-minute. And what is the 12-minute telling me? It's telling me that right now, the oscillator, you can look at the guideline. The guideline, like an oscillator, is giving us an early indication that price action is turning to the downside. So it's starting to match, okay? That it's going down a little bit more. And what do we have here? The guideline is saying, yes, we were in an uptrend, but we are starting to curve. The average price is starting to curve. We know it's curving because if you look at the tip, which is what's called the mean, M-E-A-N, the tip of this right here is called the mean. If it's above where it crosses or below, then that gives you an even stronger indication. So because the mean of this guideline is below this cross, that's another indication that the trend is down. I also have a pivot high. That's another indication that the trend is down. I also have red Heikin-Ashi, another indication that the trend is down. And watch this. Every time it crosses, it changes the trend. When these two cross, what happened? Price action went down. Almost crossed, but didn't. So what did price action do? It kept going down. But the moment it crossed, what did price action do? It changed and started going up. And then the moment it crossed again, what do you think it's doing? Going down. So every cross, hear me carefully, I'm not going to change my mind about what I'm about to say right now. You can report me to whoever you want to report me to. But every time those two lines cross, the trend will change 100% of the time. Whether for a short period of time or a long period of time, it doesn't matter. But the trend will change because that's what it means. It means that the long-term trend, meaning the average, the moving average, which is this guideline, has now met the current trend, the current price trend, which is this guideline. And when these two meet, hear me carefully, it creates support or resistance. So I literally can just take this right here, turn off my magnet mode, put a line right here. I just identified a point of control, or what some of you might call support. We can call it that as well. All right. What do you think this cross is? Now that it's coming down, this is going to be resistance. See how I'm making you guys' life easy? Now you see price action is in between support and resistance. It has to break one of these for us to see which way the trend is going. But I can already tell you the direction that the trend is going. It's going down because we already saw it earlier that it's in a downtrend. And we can even see it here. Matter of fact, on the 12-minute, when I zoom out, it's already showing me where it's going when it goes down. So this is how far you guys want to go before you start getting into some muddy waters. Will it break this? I believe it will. I think it's going to probably go down a little more, but we're just going to focus on how far it's going to go down here, which means it needs to break this area here. Now, I don't like to call it support or resistance, but you can treat it like that. I like to call it a point of control, and I'm going to show you why. Now, it can act as support and resistance, but I'd rather call it a point of control, because what this is telling me is this is where the bulls and the bears were fighting, and it tells you who won the battle at this point of control. Who controlled this point right here? The bulls did. From 86.66 on up, the bulls controlled the market until it got up here to 86.81, and now who's controlling the market? The bears are controlling the market. That's what that means. So if price action on the 12-minute chart, if a 12-minute candle opens and closes fully below 86.66, you better get out of your long position and start shorting, because that means the sellers have broken through the control of the buyers. And if they have, this thing's going to keep going down. Vice versa for this up here. All right. So now that we understand how those work, what you want to do on this 12-minute chart is you want to look at where the point of control is. You want to see what type of control it is. In this case, they're controlling resistance. And so the sellers are in control. They're controlling the market right now. So since the sellers are in control, all I want to do is find the point of control, look for the very first red candle after the point of control. And so I use my vertical line here, turn back on my magnet mode. So as you can see, if I were to zoom in, notice this red candle, when I put the vertical line on there, is before the cross. That means this is not the candle. This is invalid. I don't want that one. I want the candle after the cross. So the first red candle, because everything is showing me downtrend. I got my pivot lows. I got my downtrend signal. I got my downtrend confirmed. I got my red smooth Heikin-Ashi. I got my guideline and my guideline crossing. I got so much information that it's on its way down. Even P2P, when I first did P2P, it showed me that it still has a little bit of ways to go down to demand. So everything's pointing down. From the 12-day to the 12-hour to the 12-minute, everything is pointing downward so far. So then now that I found the red candle that matches the downtrend after the point of control here, all I'm going to do, very easy, is take a horizontal ray and snap it at the bottom, or snap it on the closed price of that candle. Do this here. There we go. So the closed price of a red candle is the bottom of the body. So it's this body part right here, not the bottom of the wick, but the bottom of the body. And the closed price of a green candle is the top of the body. That's where it closed. Okay, so this red candle closed at the bottom. So you want to put this here, and you want to label this as a sell limit order. And you do not want to get in the trade. I'll say it again on the video. I'm going to plug in here 12-minute because that's where we got it from. You want to label it too where you got it from, so you can not waste time going back to the chart if you need to. You do not want to jump in this order. That's why you're going to place a sell limit order right here. Why? Because look at what it did. Even though you're going to get in here at 86.75, it could wick down and pull you up, and now you'll be in drawdown. So what you're doing is creating a limit order, meaning you're going to put your price here, but you're waiting for price action to break out to the downside first. Once it breaks out to the downside, maybe 10 or so pips, then you place this order. And you wait for price action to come back to you. I'm going to show you when we do our back test. while you're waiting for this to happen, and you know it's a downtrend, the second thing you're going to do is you're going to take another horizontal line or horizontal ray, and you're going to put it on the previous pivot low. So the previous pivot low is right here. So right there, I'm just going to put sell stop order. That's on the 12-minute chart as well. And now there's my orders. And I'm just going to wait for this to hit or for this to hit. And then my TP is going to be wherever I want my TP to be. Maybe it's going to be here to get out here. Or if I go back to my 12-day chart here, I can stay in this trade until it gets down here closer to the buy order. I can make this buy order my TP. And once it hits this buy order, I'm out of the trade and then I wait for it to go long. But notice how we zoomed into 12-minute chart and we found an area to get in on a sell limit order when you would not have normally found that being on this high time frame chart like this. So now let's back test what I'm saying. I'm gonna delete this line, delete this line. I'm gonna pick a random date. Let's pick a different year. Let's pick before COVID, 2019. All right. So I'm just going to stay on the 12-minute chart. Okay, it won't let me go back that far. So we'll just start with this. So to back test this, I'm going to use a bar replay here. All right, and we're just going to act like we just got on here. Just like with anything, nothing's perfect, but we're going to go ahead and do our best to try to capitalize off of this here. Now, I'm going to go back and forth. I do not recommend that. What I recommend is that you guys only trade, when you're using TEMASHA, only trade in the direction of the trend that you got from P2P. Or got from wherever you think the trend is, wherever you got it from. Always trade in the direction of the trend. Why? Because it's more often than not. Watch this. If the trend for Aussie CAD from down here to up here is an uptrend, I'm going to say something very simple. You're going to think I'm silly for saying it this simple, but an uptrend just simply means it created more green candles than red ones. That's what an uptrend is. What is a downtrend? It created more red candles than green ones. So if you know something is in an uptrend, why would you risk counter trend trading? If you're not a professional, why would you risk counter trend trading when you know it's in an uptrend and it's not going to create that many red candles? Just wait for it to turn around, because anytime it pulls back or retraces from a trend, it's going to create an explosive move to catch back up. So yeah, it may hurt for you to wait for this pullback right here. You might be in this trade and you're like, oh man, this thing already pulled back. Let's say this was a lot of pips. This is only 13 pips, but it pulled back 13 pips. But to get out of that 13 pip pullback, look what it had to do. It had to explode 36 pips. It has to come out of the pullback and go past it. So it doesn't benefit you to go against the trend when it's more often gonna go, you know, in your favor if you just hold on to it. It makes more sense to just stay with the trend. But for the sake of time, I'm going to go both ways. That way I can show you when it works and when it doesn't work. So we're going to go ahead and start here. And let me label this real quick so I'll know where I'm at in the big picture scheme of things. Make it orange, and then I'm going to go back to the 12-day because I want to see where I'm at. Okay, so as you guys can see, we're at mid pivot. So since we're at mid pivot, that means the rest of the trend is down. It should be on its way down. As you can see, it pulled back. It might even go a little higher, but it should be on its way down because the rest of the candles were down. All right, so now that we know it's down, let's go ahead and start this thing. go back to the 12-minute. So if you guys opened up this chart and you saw this right now, what you would do is this. You see this cross here, you would just take your vertical line, put it there, and you would check to see which candle is in, which red candle is in front of this. So I'm just gonna move this because that's not it. It's not this one. And it's not this one. Why? Because this was not completed. I have to wait for it to be completed. So let's say while I'm waiting for that to be completed, what I'm gonna do is go to the previous thing here. Let me try to do this. I'm gonna show you guys something. Oh, it's not gonna do it. So this one would have been harder because it dropped too fast. So this would have alerted you. You would have got your alert, and then you would have seen that it was still in the middle of preparing the candle. And so the pivot low over here is at the same spot as where you would put your sell limit order. So you'd have to go to the next lower one down here. So I'm gonna go here and I'm gonna put a sell stop order on my 12-minute chart. Why? Because I got an alert. I got a pivot high, downtrend signal, downtrend confirmed, red smooth Heikin-Ashi, guideline and guideline have crossed, and my candle's moving down. So here's my sell stop order. My sell limit order is gonna be at the close of the first red candle after the cross. So this is the cross. First red candle after the cross is this one. This one right here. So then you would put your sell limit order right there. Unfortunately, they're next to each other. That typically does not happen. But we're just gonna leave them both alone. Now look at what's happening. Already, if you would have caught this sell stop order, you're already green. You're not green on this one yet because you're waiting for this to come down before you set this. Now you could set this order here. Let's see what happens. Price action would have wicked up, back up to your sell limit order. Maybe you would have gotten in depending on spread, maybe not. But at least you're in with a sell stop order. You would have been green already. You would have been holding the trade, holding the trade, holding the trade. All you're waiting for is for it to cross again. It's getting close to crossing, but it didn't. So you're just holding the trade, holding the trade. Up, it crossed. You would have gotten an alert. That alert would have told you to get out of the trade. All you would have done was exit, and you would have been up roughly 20 pips. You'd have made 20 pips without even stressing out, because it would have alerted you to get out of the trade because it crossed again. So now that it crossed and I'm out of that trade, what am I going to do? I'm going to trade back and forth, which is what I told you guys not to do. Okay. You're supposed to wait for this to give you another signal to go down, but we're just going to, for the sake of time. So this right here, the first, it's crossing to the upside. I got my pivot low, my uptrend signal, my uptrend confirmed. I have green Heikin-Ashi. I have my guideline and my guideline crossing, and I have my first green candle right here after the cross. What am I gonna do? I'm gonna put my horizontal ray at the close of that green candle, and that's gonna be my buy limit order. Where's my buy stop order gonna be? At the previous pivot high over here. That's gonna be my buy stop order. Delete this, play, and we're gonna see what happens. All right, so price action, your buy stop order would have triggered, and your buy limit order would not have triggered because you're waiting for it to break out. Once it breaks out, now you can place your buy limit order in case it pulls back, and now you're gonna have a double position. So always split your positions in half. So you can do a 5,000 here. Let's say you got a $5,000 account. You can do 2,500 here and 2,500 here. Or if you want to be aggressive, do 5,000 and 5,000. It's up to you. Hit play. Let's see what it does. We're in our buy stop order. It's green. We're looking good. Oops. Let me turn back on TEMASHA. There we go. You want to see that too? There we go. So it's still going up. I'm staying in the trade. All I'm waiting for is for my thing to alert me that it's crossing again. But until then, I'm just gonna stay in this trade. All right, it alerted me. Now that it alerted me, how much money did I make? Roughly from here to about here, made another 45 pips. I'm already up 65 pips. I haven't even placed a stop loss. Did you guys see that? Never once did I place a stop loss. Because the thing is gonna alert me when the trend is changing. As soon as I get my alert, I get out. I don't need a stop loss because this is my stop loss. It's going to tell me when to get out of my trade. So I'm gonna get out of this and now I'm gonna go back the other direction. So how are we gonna do this on the 12-minute chart? I'm gonna hit this. I have my pivot high, my downtrend signal, another pivot high, downtrend confirmed back there, red smooth Heikin-Ashi, guideline and guideline are crossing. So I need the first red candle after it crossed. I'm gonna put it at the close and this is going to be my sell limit order, but I'm not gonna set it yet. The previous pivot is gonna be over here. You guys can't see it, but if you see a pivot high, then I want you to just know that this is the pivot low to that. It's not gonna always alert you or identify it, but just know this is the next pivot low. So that one there, that's gonna be my sell stop order. Turn back on TEMASHA and let's play and see what would have happened. Remember, we're not in that sell limit order. Remember I told you guys don't set the sell limit order? Look, I'm so glad this happened. Look at what it's doing. It's already changing trend. Remember I told you every time they cross, the trend changes 100% of the time? That's what's happening right now. It turned and said down, but now it gave another indication that it's going back up. So that means this was just a pullback. That's all this was. It was not a trend change. It was just a pullback. And so it's returning back to the upside. If you would have placed this order, you would be in drawdown because look, it would have wicked down here and jumped you into the trade. It would have wicked here and jumped you into the trade and would have pulled you back. So that's why I told you, don't set these until it breaks out from it. And maybe hits your sell stop order and then you can place it. And then in case it pulls back. So in this case, we would not be in this trade. What we would do is we would look to see if it's crossing. So we have a pivot low, uptrend signal, uptrend confirm. It crossed, green Heikin-Ashi, but we do not have, oh, we do right here. We need a green candle after the cross. Actually, that's this one here. So now I can put this right. Wait, is that it? No, it's this one. This one's after the cross. So then that'll be your buy limit order. And remember, you're not gonna place that trade. You're just gonna leave that buy limit order there. The only trade you're gonna place is the buy stop order, and you're gonna do the previous pivot high. Do not do this pivot high. Why? It's at the same spot. That makes no sense. You wanna do the one higher. Buy stop order. Bam. Let's play, see what would have happened. Look what happened. Returned again, back to the downtrend. We're not in this trade. All right, so now that it's doing this, first red candle is here. Switching back to a sell limit order. What is this here? Gotta go back here to this pivot low here, and that'll be my sell stop order. When price action is going sideways, you're gonna get a bunch of alerts like this. Now, they're not gonna happen a lot like back to back in time because this would have happened on 12/28 at 11 in the morning. The next one would not have been until almost 4 p.m. So from 11 a.m. to 4 p.m., you would not have been bothered anyway. So don't look at this like that's annoying. And then the next time from 4 p.m., you don't get another alert until almost 7 p.m. So it's a lot of hours of time in between. So don't get annoyed when it's alerting you and you're not making money. You already made 65 pips. Right now, you're just waiting for this range to finish. And you got to keep playing this game until the breakout happens. So now that we're doing this, we have our orders. Let's see what happens. We have to switch our trade back around. We're not in that limit order yet. Remember, we're not in this trade. We're waiting for this to trigger, then we put this trade on. Now look what happened. The sell stop order is there. Now we put our sell limit order in case it pulls back. But our sell stop order is taking care of us. Bam, sell limit order just got triggered. Actually, the sell limit order would not have gotten triggered because, let me go back. I'm moving too fast. Right here, you would have got alerted to get out of the trade. And this is what would have happened because it turned too fast. You would have gotten in about, where is it at? This red candle here. And then you would not have gotten alerted until this candle here. So if you look at this, you would have lost 12 pips. This would have been a loss for you. So 12 pips would have come off of your 65 pips. So you're still not losing your trades. All right, so we go here. Now you understand why I'm telling you not to go back and forth, because unless you stay with the trend, you're gonna end up running into these kinds of issues. So now I'm gonna go back the other way. Do a couple of these and then we'll move on to gold. So I'm gonna do that one. That's the limit order. And then we're gonna set the buy stop order here. And this will be a buy limit order. Now, if you guys want to set this and set this right away, you can. If you want to grab it like this, if you see it's already down here and as it comes up, it's going to hit both of these. That's up to you. You can be more aggressive if you want. You're already not trading a big position size, so why not be a little aggressive if you want to? So you hit play. Both of these would have triggered, but let's see if the trend holds. Looks like it's about to change again. Bam, it's changing again. So you would have broke even on this trade, because look at what they're doing. They're playing the range. And every time they spike up real fast like that, it's hard for the indicator doesn't have enough candles to calculate. And so that's why it's going back and forth. This is why you want to pick a particular trend and kind of stick with it. All right. So going back to this here, we're going to use this. Now we're getting somewhere. Look, you see how it highlighted supply? That means this trend is probably going to work out. Look how the indicator that's P2P right here. Because I have P2P on as well as TEMASHA, P2P is highlighting supply. So this downtrend may work out. Let's see. This is going to be a sell limit order. And for my sell stop order, guys, I'm going to use this here. Even though you don't see anything here, this says pivot high. This pivot high had to come from somewhere, so it came from this pivot low. The reason why you don't see it labeled like this is because there wasn't enough data for it to populate. So if you guys know how to read pivots, find your own pivot yourself and you can do it like this. Sell stop. So now let's see if this works out. Guess not. Guess that wasn't real supply. Or let's see. Let me see if it turns back down to the downside. Maybe not. All right, so let's go here. Bam. I'm trying to wait for another breakout. That's what we're waiting on, that breakout. You're not gonna make money if it ranges. You're only gonna make money when price action breaks out from the range. And that's what you're waiting on here, is the breakout. So this one would be this pivot here. Let's see what we got. And there's the uptrend. So these two would have been buy orders. Dang, that thing, look, you see how they crossed twice again, but then it kept using the buy? I was supposed to get out, but I didn't. But look how it continued that uptrend. And you see how it's crossing again? It'll cross twice sometimes. So you guys just gotta understand and know which direction it's going and just kind of work with that trend and then stick with it. Any questions? That's pretty much the gist of it. I can keep doing that over and over and over again, but that's pretty much all you're doing when you're finding the direction with TEMASHA. Any questions on that? Let me see in the chat. All right, no questions in the chat group. All right, cool. So let's do gold for Kavork, and then we will get out of here. Gold right here. All right. So let's get rid of these orders here. All right. So we're going to turn on P2P. Remember, we're going to go to point and figure. And most of you are going to day trade, so I'm just going to stay on this time frame. I'm going to go, let's say, 15-minute time frame. Do that. Nope, let me follow the rules. I'm just going to follow the rules. I don't want you guys having bad habits. I was about to give y'all a bad habit. All right, so let's find current price. Let's do the ABC 1, 2, 3. All right, so here's 1. Got current price right here. Where did current price come from? Current price came from this pivot up here. So we're going to keep going down until we see it. One time frame at a time. There we go. So here it is right here. And we can clearly see it reacted off of that. So as price was going up on gold, it was going up to this level here, and now it reacted to it. So I'm going to go here. I'm going to go to inputs. And they're at the same level, but here's current price. Current price came from this pivot high, and this pivot high came from this pivot low. So there's my 2 prices I need for my curve. I'm gonna go into settings on P2P, hit it, reset everything, go here, 2051, and the bottom is 1624. Hit OK. Now I can, oops, delete these. And then I'm going to, this right here is going to shade all of the area that I want to work with. So basically I'm ignoring what I see back here, and I'm just focusing on this shaded area in the front. It's telling me it's in a downtrend. It's already showing me that the 2 prices I should have gotten in on, it already passed it up, and it's already on its way down. So let me get rid of anything, all these buy order TPs. I don't need those because I'm not buying, I'm selling. And now that I found this on the 5 hour, I found my first 2 pivots that are related to current price on the 5 hour. So I'm now going to go to the Japanese candlestick and change my 5 hour to a 5-day. And there you have it. That's what gold is doing right now. Gold should be coming down to 1690. It's in a downtrend. So you can already see price action already came down. And look, if we were already in the trade at these 2 prices, what would have happened? It would have hit our TP1 like a sniper perfectly. And then you would shave. That's why I tell you guys to shave. Take some profit off of here while it pulls back. Because when it pulled back, what did it do? It pulled back perfectly to the sell order. You would have gotten a second opportunity to short. And now you would have been in this short here. You can even use the mid pivot as a TP. And then you have a TP here, you shave here, or you close everything out here, and then you get ready to start buying again. So we already have it, P2P, done. P2P is really easy. It helps you just set your trade up. So all you got to do is enter these two buy, these 2 sell positions, and that's it. And you put your TPs in and you're done. But for those of you who are like, okay, that looked easy, but it already left supply and it's not even close to demand. How do I get in here? You got to go back to TEMASHA. So I got to turn TEMASHA on again. And because I'm on the 5-day, I was on the 5 hour on point and figure. So remember, when we were using point and figure, we used the 5 hour chart to get our pivot high and pivot low. When I come to the Japanese candlesticks, I'm on the 5-day. But now that I'm going to use TEMASHA to get a sniper entry, I got to go to the 5-minute. So now I'm going to go down to the 5-minute chart. And what is the 5-minute chart telling me? The 5-minute chart is saying, okay, yeah, price action is in a downtrend. As you can see, P2P is saying it's in a downtrend, but it's already turning towards the upside. So this is where I tell you guys to trade with the trend. So if you're going to trade with the trend for gold, then the way you would get in this trade here, if you know it's in a downtrend, all you got to do is find the cross again. This is the point of control. This is where support would be. So anything below this price is going to keep shorting. So all you got to do is either put a sell stop order here, which would be aggressive because that's the closest one, or you can do a more conservative one, or a moderate one, I should say, down here. You could do either one of these to sell, and you just wait. It can go all the way up all at once, but you're waiting for this thing to short, and once it passes this up, it's going to keep tanking. Why? Because it's in a downtrend. Let's go back to that 5-day. See how you would look on the 5-day? That's how you would look. Ready and set to go. Here's another trick. If it already used a TP in the past, you can use this TP as a limit order. So all you got to do is go in here and, oh, the market's closed. Oh, no. I think I turned it off.
Hey, yo, bro.
Yep.
I don't think you did realize that you just gave them the game, like, for real.
I did. I hope they get it.
Yo.
This is how I keep my bank account growing. So sell limit order, the sell order TP, since it already used this sell order right here, I can change this sell order in here, P2P, go to settings, that style, that TP1 1905, I want to get rid of that sell order TP1. Get rid of it, and I'm going to input my own. But instead of a TP, I'm going to call it a sell limit order at 1905. It was the same price. And bam, there you have it. I either get in here at 1905 to short, or I get in on these sell stop orders at 1886 to short. But either way, I'm going to short. And look what it's doing. It's getting ready to cross, possibly. Okay, and then it's on its way down. And so this is how you would jump in this trade. Notice I'm already in. So I'm already in. I'm already green as well, too. So if you guys want to jump in on this trade, this is how you would jump in. But look at how quickly I found curve. And look at how quickly I was able to jump in on this trade with a sniper entry. This is why when I post my trades, you guys are like, man, how are these trades working out so well? It's because all of the years of our professionalism have been plugged into these indicators, and it just gives you the answer real fast. And so I'm going to send you guys the video of this training here. If you guys don't have any other questions, I'll send you the video. And if you want more information on the indicators, then all you got to do is DM. I just put it into the chat group, Lady Ward. Just send the DM to her and just say, hey, I want to get started with the indicator, and then she'll go ahead and take care of you. All right. If there's any other questions, Kavork said, amazing. Thank you. Hey, you're welcome. Glad you enjoyed yourself. If there's any comments, anybody want to make a comment? Other than Andre, he already made one. He said, I'm giving y'all the game. And that's the whole point. I'm trying to give it to you. I'm trying to set you guys free. All right.
Hey, Professor,
Yes.
can you hear me?
What's up, Chris?
Any chance you could just touch briefly on the settings for TEMASHA? I know you did for P2P.
Okay.
Yeah.
Yeah, no problem. So when you go into the settings, I don't know how. Let me see if I can. All right, so when you go into TEMASHA, you just hit reset number 1, and it'll already have whatever you need in here. But don't change anything. You want to make sure that the downtrend and uptrend are checked. You don't want to change any of these here, and you don't need to because you're not using this or this. This is for those of you who might be interested in auto trading. So if we were to turn this on, you would plug in whatever your balance is, you select your currency, and then you put your 2% risk is how this is what I was telling you guys earlier. Don't trade with more than 2%. And then it'll do like a 1-to-1 trade for you, and it'll get in and out of here. But I don't offer the ATI service. So you have to pay for ATI service through a third party, and I think it's $25 a month. I have nothing to do with that. So this can only be activated if you pay for ATI services. And if you pay for ATI services, which I believe again is $25 a month, then what will happen is this thing will become an auto trader, and you won't need to manually do what I just showed you. It'll just get in and out of the trades on its own for you. All right, but you got to be honest about your balance. If you lie about your balance, you're going to be risking more than your account can handle. So don't lie about this number. The greater this balance, the greater your position size. The system is going to put the position size that's related to your balance. So make sure you're honest about what your balance is so you're not over leveraging. Because if you have this thing on an auto trader and you're being aggressive right here, you may not have no money tomorrow, depending on how much it ranges back and forth. All right, style.
Or you might have all the money in the world. No, I'm playing. I'm playing.
Or you might come back tomorrow and have all the money in the world. Exactly. Your account probably blew up. But we always got to lean towards the rough side, you know. SEC and FINRA always wants us to talk about risk. How much you could lose. Got to say that first. All right, before we talk about winning. Also, I'm going to fix this. When you reset it, this should not be unchecked. All of these 3 should be checked. And I'm going to reset it so that this is not checked as well. And you need this unchecked. You don't need that either. I'm not sure about this one. This doesn't matter. But this is how you want this to look right out the box. For those of you who want to scout using TEMASHA, then you would turn on trade target price. Trade target price is our way of saying ATR. It's the same as the average true range. So when you click on that, you're targeting your trade price. So if I go in here and I say, hey, I want to get in here, if I turn on target trade price, look at what it does. It tells me right here, get out at this price because this is a strong support level, 118.15. And if I go all the way across, I can pretty much see, that's a pretty strong level there, all the way across. So this will help those of you who are scalpers. If you're not a scalper, you like making the money the whole way down, then you want to get in this trade, you just want to ride it all the way here. But this is telling you that we're going to get a pullback right here. So that's up to you. One person on the team, Desmond, he loves TEMASHA. He lives, eats, sleeps, and breathes TEMASHA. He doesn't do nothing else. He doesn't even use P2P. He don't care about curve. He just jumps in here and swims with the sharks. And he gets in when TEMASHA says get in, and then he TPs here. He does not wait for TEMASHA to tell him when the trend is changing. He just gets out wherever it's going to pull back next. He doesn't wait, because if you wait for the trend change, you're going to also give up some of your profit, because that turn has to give up. It has to create a pivot first, and then it has to start going up and confirm itself before it tells you to get out. So he doesn't like that part. He wants the max. So to maximize your earnings, if you turn on trade target price, it'll tell you where the next major turn is, and you can just exit there. but I don't have that on because I don't like trading like that. That's a personal preference to me versus Desmond, who's another trader on our team. He loves it. You guys got to figure out what works for you. I want all of my money and I want my time to be free. I'm busy. I have a lot of stuff that I'm doing. I don't have time to sit at this computer and keep putting these lines back on here, back and forth, back and forth, back and forth. So what do? Once I get in, I just hold it. And I look to see how far is it going eventually. And I just put the very last TP and that's it. So it's up to you how you want to trade this. But these are the settings that I would put in here. Did that answer your question, Chris?
Yeah, it touched on it. I probably have more questions, but I guess I'll leave it at that for now.
No, what else? What else you got? I got you.
Oh, shoot. I don't know, man. I think gotta go over this for a bit. Probably have 9 questions, but I gotta pick the best one, right? So,
all right.
time and everything. So I'll leave it at that for now.
Okay. But I hope I explained the settings here. This is the way I set it. I'm going to send you guys the video so you can go back over this again. But this is how the settings should look. Make sure downtrend and uptrend are checked. You can leave all of this alone unless you are interested in ATI. If you are, hit up Lady Ward. She'll show you how to set all of this up too. Otherwise, go to style and make sure these 3 are selected because these are the most important. This is up to you. If you want to see ATR, that's up to you. And labels on price scale, that's these over here. You do not need to see what price the guideline and the guideline are at. It's unnecessary. You're waiting for it to cross each other. You're not looking to see what price it's at. So just to keep your chart clean, you can turn this off. All right, and then I forgot what this does. I don't see anything moving, so I guess it's irrelevant. All right, but that's the settings for TEMASHA. All right, well, I hope I helped you guys, and I'll do these training videos as often as I possibly can. If you guys have any questions, again, we have a separate P2P subscribers group. So if you guys do want access to the indicators after you speak with Lady Ward, you're going to be part of a separate group. That group gets to ask me any questions you want. It's almost like mentorship. You guys are free to ask me any question about the market. You're going to get priority questions answered, priority request. I'll post sometimes trades that I won't post in the free chat group. It'll just be like that. It'll be random, but there will be some special perks there. Also, when I'm in a particular area and I'm traveling, sometimes I'll let the subscribers know I'm in an area, and if you guys live in that area, you come shake hands, stuff like that. So that's what that's about. So it just gives you access to the entire team and more privileges, I guess you could say, for those of you who want to be part of the subscribers group. All right. Well, you guys have a great one. God bless you. Have a great weekend, and I'll see you guys on the other side. Take care.